Mark, how's the swing trading program going this week?
It's a great day in flyover country. Today in the market, we had a glitch. So what happened? Well, before the stock market opens every day, the opening price of each stock is determined by thousands of orders to buy and sell the individual stocks. These orders are combined into a single book for each stock that balances overall supply and demand for each stock. A single price is then quoted at the open, and all orders are aggregated into a single opening auction print. So it appears that many orders to buy and sell stocks did not make it into the order book that determines the opening price, and that the opening auction print did not happen to those stocks affected. Basically, we had a liquidity problem with large spreads between buy and sell orders with low volumes. Now, the New York Stock Exchange will most likely bust all the initial trades of companies affected by this glitch for erroneous opening prices. Most likely, the correct opening price will be the price when the stock reopened. This is why I don't use market orders, especially at market open. This affected ZTX, a stock we have in our paper trade portfolio. Price action eventually came back into balance, but what a range between the high and the low price of the day. For more information on swing trading, check out the Platinum channel at Best of Us Investors. Have a great day.